Well, let's also address what's going on in the world of macros. And to chat more about that, Radhika Rao, India economist at DBS, is with us on the show. Radhika, hi there. Afternoon. I want to start off by talking about last week's key event, and that was the RBI Monetary Policy. How have you read into the kind of commentary that came out from the RBI governor? Did it come as pretty much on expected lines, the fact that there was a status quo on the rates? And what is your expectation as to what we can see in terms of a follow through for the rest of the year from the Reserve Bank?
Hi, good afternoon. I think the RBI, I think it was a mixed message. Firstly, I think the biggest surprise was the marked uh, change in the tone. I would think they, compared to the minutes that came out of the February meeting, they sounded much more comfortable with the inflation outlook. Not only was the March 2018 quarter inflation forecast downgraded, but even for FY19, the entire trajectory was brought lower. So I thought the tone and the dovish, relatively dovish inflation projections was a surprise. But apart from that, I think they tried to balance that by highlighting risks on the horizon. I think we're pretty much in agreement with how the MSP, it's an uncertain bit on how MSP and oil prices in particular will pan out. I think compared to where the consensus is, we are a bit more, not as wary of the MSP increases. If the government does stick to the A2 plus FL cost concept, I don't think the extent of increase in the MSPs will be as big as the broader, popular narrative seems to suggest. That said, I think for FY19, our inflation numbers are at 4.6% on average. That means inflation will be above target, but not acute enough for the central bank to act. To that extent, I think the RBI is settling in for a long pause into 2018, banking on what's happening on factors that are exogenous to their forecast. In that account, I think this week's inflation number will be quite benign at about 4.1% according to our estimates.
Right. Can you just talk to us about what's happening in the global economy with the sort of view that is coming in on different trade wars, rates going up? What's the sense that you get? Do you think that global economic growth could also slow down if this global trade worry increases?
I wouldn't call it a trade war as yet, but yes, it is a trade skirmish between, right now it's primarily between the US and the China trading barbs. But though India is not in the firing line, so to speak, the economy will not be immune as well. So if we take, for example, the steel and aluminium tariffs that were imposed earlier this year, India is also not exempted from that list. To that extent, I think next week's India-US trade talks will become important, where India is going to vie for an exemption. If that doesn't come through, I think it will join its WTO counterparts to call against this kind of import tariff. I think it's also interesting that India itself, has also taken protectionist moves in the past few years. I think if you just dial back to the budget this year, we did see some import tariffs being addressed. I think the ration was that it's to promote manufacturing growth in the economy as well as create more jobs. So it's a two-way field, but insofar as the impact from trade tariffs particular is concerned, I think for India, services will be a bigger thing to play for than goods trade. Services trade surplus has actually come down in the past 3-4 years from about 4% of GDP to 3%, which does not bode well for our current account math. So that to answer your trade war question. And on the other hand, yes, I think the US rates are factoring in what the Fed is going to do. I think the Fed will also act as the evolving growth inflation trajectory pans out. For us, we expect 3 rate hikes this year. Yes, the latest bout of US employment numbers were weaker than expected, but that partly has been put to seasonal effects. We do think the global growth is on a positive, carries a positive momentum. So it will keep the Fed at least on track. And gradually, I think the ECB and the other global central banks will join, probably not this year, but 2019-20. But otherwise, I think we are not as cautious on the global growth trajectory for this year.
Does India stand well within this with the sort of rates that we have on the 10-year bond, with the sort of self-consumption that India has? Does it become a very favorable investment destination or a good destination for FDI and FII investment?
Certainly, I think we have seen FIIs, I mean, by nature, portfolio investors look for value, and then you would see a movement in and out. But I think on a broad basis, recently, I mean, late last week, the FBI limit for debt was raised. I think it was a bit smaller than anticipated. We had expected at least a 1% increase this year, but it was a 0.5% for FY19, another 0.5 for FY20. To that extent, I think the FYI inflows will be smaller than earlier expected. But nonetheless, I think if Indian rates remain at attractive levels, along with the currency that is relatively stable, I think we should see inflows continue to come in. On the FDI front, I think the momentum that we saw last year has not, tapered out second half of last year. And if this protectionist talk gathers momentum, I think some of the bigger corporates might adopt a wait and watch approach. But longer out, I think if you were to look at the other EM markets and compared to India, our structural factors as well as cyclical, in terms of the cyclical growth momentum, is coming back in a strong way. So we do think that any of the businesses looking for a longer term sustainable investment will be much interested in investing in India. So we do think that the FDI inflows will continue to come in, probably not as strongly as we saw in FY17, 18, but nonetheless, it's still about 40-50 billion this year. I think the other factor that we watch for is the election and how the reform momentum sustains ahead of it. But otherwise, yeah, I do think that foreign investors as well as FDIs will continue to stay invested in the economy.
So the India story looking strong. That's the DBS view coming in.